Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Good. Hey everybody, this is David Blake with Tuesday Tech Talk, and today we're going to quickly review the last few days of what's been going on in the market, take a look at what we expect over the next couple of days, look at some industry groups that might be going on. And we're also going to look at a feature on the Market Edge website that's probably one of the most important things that we have that you should be using on your subscription. We're going to go over that on how to manage your portfolio a little bit more like what a professional money manager would do. Okay, first off, we'll talk a little bit about last week. And, most of the major averages were a little bit lower last week. As far as what happened technically, there wasn't really much deterioration. Some of the indexes fell below their 50-day moving average, in particular the Dow Jones, S&P, and the NASDAQ. Yesterday we had a little bit of a bounce-back rally, and the S&P and Dow Jones are back above that 50-day moving average. However, the NASDAQ is still having a little bit of a problem. The CTI remains at a bullish +7. Market posture is still bullish. We expect that's projected to remain bullish until about 8/12. The momentum index last week slipped from a +7 to a +3, which was neutral. And sentiment index moved up to a neutral +2 from a 0, which showed investors were becoming a little bit more bearish on the market. But a lot of what was going on towards the end of last week especially was due to this Brexit and the UK referendum on leaving the Eurozone. And that's probably going to control pretty much what goes on until about Thursday. Okay, going into last week, the market was overbought. That condition has been alleviated. We saw the VIX spike up to its highest level since about mid-February last week. It's come back down to around 18.5 or so now. It's been kind of flat the last couple of days. Came down a little bit yesterday, especially in the morning. But we have, like I said, we have seen the S&P and Dow go back above the 50-day moving average as of yesterday and today. Rates, the market still looks good technically. The rate's apparently going to be low for lower. Yellen's given her testimony today, which hasn't done much for the market yet. We'll see what happens in the afternoon. Another positive from last week is that the markets were able to stay above the May lows, which is something you want to watch. And the upside targets for the Dow at this stage, I believe once we get this Brexit thing behind us, the Dow has a chance to get to about 18,350. S&P 500 should challenge around 2140, and the NASDAQ, I have a target price on there of about 5040. Okay, we're not going to look at the indexes this week, mainly because they've been in another trading range ahead of this Brexit vote. We'll see what happens. I think so far, every time we get a little bit of a pull where it shows that the UK is probably going to stay, we do get a little bit of an upward bias in trading. But I do want to let you know I would not be going all in, even if the market starts to move up higher at this stage, mainly because I'm afraid that I kind of smell a sell the news event, kind of a mindset in the market where if we get this thing and you see the thing spike up as a relief rally of the indecision that's been going on, I question whether it would hold. If not, some people actually some fast traders just move out quickly. However, I would buy the dip if we do get a quick sell-off, even if the UK does stay. So because I do like the conditions of the market going forward. Okay, we're going to get my arrow here. First thing, what we're going to talk about today is the Stock Watch feature. Okay, if you're a new subscriber or an old subscriber, you're not using this Stock Watch feature, it's something that I think you can get a lot of use out of, and it can actually prevent stocks in your portfolio from blowing up. And sometimes we always get emails that say, well, I bought 3 upgrades and lost money on all 3 of them. And we're going to show you why you may be losing money on some of the picks that you take. Okay, well, once you've logged into the site, you can see the Stock Watch tab up here at the top of the page. Also, this is where you'll find over here on the left the daily market commentary, over here the weekly commentary. which gives the CTI calls. You'll also find the doc talks about stocks. You can catch the old webinars over here and look at that. But when you click on the Stock Watch feature up here, the first thing that's going to come up is this line. It's going to allow you to build your own list of stocks. Okay, this is where you want to set up a list of what your current holdings are in the market. You also want to make maybe a list or two of your current holdings. You might make up some of your favorite industry groups or even sectors to make a list up in here. And this is where you're going to monitor all your portfolio holdings. And this is where what we're going to try to do today is to show you how to have that one or two stocks that blow up your portfolio and keep you from making money for the year. Every investor has a bad habit that they get into a stock, they buy it at 20, it goes down to 15, and they hold on to it, hoping as soon as it gets back up to 20, I'm going to sell it, and they end up holding their losers like that. Okay, that's a bad move because now you're you're buying stocks on an I wish research, which means I wish it would have a little bit higher so I can get out of it, and that's not what you're going to do to be profitable and try to outperform the market. So what you can do on this page is going to show you how to make a list. If you go up here to the maintenance page and click on that, on the drop down, there'll be something on there called Add List. When you highlight that, a screen will pop up that will allow you to name the list whatever you want to. Then you can follow the directions from there, and you go back up here, you'll highlight the list that you named, go over here and add stocks to it, and then they'll show up as a list dropping forward. I'll go live to the website later on. Okay, once you have your watch list and holdings list, I want to show how you can manage that in just a few minutes a day, maybe just checking it once or twice a week. Okay, if you don't know where to find a good list of fundamentally sound stocks, we've already given you a list that can probably outperform the market if you get the right ones. We have the Standard & Poor's Capital IQ 5 and 4-star stocks. They're all, according to their analysts, should outperform the market going forward. And this is a great place to find some ideas of where to buy some good candidates. Now, the problem is, if you just go to that list and take a look at it, and a lot of our broker clients will say this, okay, I buy the list, they give me 200 stocks that they think will outperform the market over the next 2 years. Okay, that's great. However, if I if I pick 2 or 3 of the stocks on there just out of the blue, that maybe the technicals don't support a rise, or maybe the stock's already risen, I'm not going to. I think their research stinks. That's not true. It's just that whatever made the stock rise over the short term may have traders may be trading out of that pop or whatever. But they're all good stocks. It's just your timing element was wrong. Okay. So what I want to find out next, after I get this list, we would highlight the 5-star stocks. And in this case, what we're going to do first is let's just pretend that 5-star list is my current holdings. Okay, what I want to find out every day, or once or twice a week, what stocks do I own that are currently showing signs of deterioration, that are starting to break down technically, whether they're testing support levels, whether they're oversold, whether they're under distribution, something like that. So if I go and pull my list up here, and then go over to the opinions and conditions drop down, besides finding out what's been upgraded or downgraded or whatever, you can, if you go in here and click on deteriorating conditions, that's going to give you a list of all the stocks that technically are beginning to show signs of that they may be in a little bit of trouble. Okay? Now, in this case, when I click on that, what I want to know is, do I have any stocks in here that have a score of a -3 or a -4? If I click on the opinion box, it'll list the stocks by order from -4 all the way down to a -1. If I have a stock in this here that's -3 or -4 in the score, okay, that tells me that technically this is a little bit more of maybe the market's sold off for a week or so, and the stock's just going down with that, or maybe we're now we're starting to look at maybe technically something's going on where we're getting more of a pullback than just profit taking or market risk. We're starting to see something going on with this position that it allows me to be proactive It allows me to prepare myself or my clients, if you're a professional, of something that may break down. Okay, now what do I do if I see my stock come up here? In this case, we have ADS, Alliance Data, was downgraded to a neutral. Parexel International was downgraded. Korea Electric was downgraded. And here's a couple of -3s. Okay, if I have any of these, the first thing I want to determine is this a trading stock that I bought, that I got off a thing? I think it's an area that is, should show some short-term growth. The stock looks, looks like it could go from 20 to 30 or something. Or is this a stock in here, perhaps like Alliance Data, that I believe I want to hold long for the long term? Okay, if it's a long-term hold, I don't necessarily want to be going in and out of the stock, 3 or 4 times a year, based on the second opinion. But what I can do is, number one, I can consider, okay, if it's Bristol Myers or a Facebook or something, what can I do with this stock? Because according to Market Edge and second opinion, this thing is probably going sideways to down over the next, say, 30 to 60 days. Okay, one thing I can do, if I got a heck of a profit and the whole market looks weak, maybe I sell some puts as protection, and that way if the market rolls over, the stock breaks support and goes down $5, at least I'm breaking even. If the chart still looks good and it's going to go into a -3, perhaps I sell some covered calls, something like that on this, or sell some puts that allows me to, the stock goes sideways. At least I can make some money on it, but it's not going to be something that I want to, I don't want to sell for the long run, because I think it's a stock or a company that over the next 4 or 5 years I want to own. So that allows you to be a little bit more proactive on something like that, okay? Now, if we decide it is a stock that I want to sell, let's say, what's this, Celgene. Let's just say I own Celgene, and I decided, I've made some money on that. I do want to get rid of it. So we go over here, and again, I told you a great list of fundamentals good stocks would be the S&P Cap IQ 5 stars or 4 stars. So when I click on that and I go to indicators, it's going to give me the list of stocks and list them from basically, if I click on relative strength, it'll allow me to list the stocks in that list from the strongest to the weakest. Which ones are outperforming the S&P 500, which ones are underperforming the S&P 500. Now, we have canned indicators up here that does not include the relative strength, and it also does not include the 5-day percentage change. So to do that, if you go up into the Help Manage Your Account area, you'll see a tab called Report Output, which will allow you to put a couple of the things that, if you look at this later on, you can see what I look at, like the up-down slope I add, and I want to see what the MACD short-term is on these lists. So it'll allow you to get the indicators that you want to watch, and also the power rating when you pull up a good buy candidate. Okay, so after I make the list of the different fields, I want to find, number one, I want to find a stock that's already doing well. I want to find a stock that's outperforming the market. And so in this case, you have Clearwater Paper, Consolidated Energy, Triumph Group, Huntsman, Johnson Controls, Steel Dynamics, a good list of good companies. And if I go over here and I click on the relative strength, it'll list them again by the strongest to weakest. Okay, but if I'm going to add a new position, there's some stocks that on here, like this Consolidated Energy, has been in the top 5 or 6 on this list probably for about 3 or 4 months. I have it in a little one of my portfolios. I'm up 70%, but on the thing, it's almost doubled, and it has pulled back a little bit. But at one point it was up like 98%. But this thing is still one of the top performers in this list. So I'm going to hold on to it. I'm not interested in selling it. But if I had sold the Celgene or one of the others, what I want to find up here now is I want a stock that's a 0. It's long with a 0. And I want the up-down slope to be up. I prefer to have the MACD short-term up. And that would give me a list of different stocks. Okay, so Huntsman was one. Here's another one, Mac Cali Realty. I don't know if that's a REIT or what. Here's Magellan Midstream. I think that's LLP. I think it's an MLP. I'm not sure. And then we have Aetna, maybe Venice. So I'll get a couple of these stocks in here. I'll get like 4 or 5 of them that are all long with 0 score. They're outperforming the market maybe by 10, 12%. I can check the power rating to see which one has the highest power rating. But then I can also go over here, and I'll take that list of 4 or 5 stocks, and I'll go over to the advanced tool next, click on industry group analysis, and what I want to know now is what stocks, what I want to buy one of these stocks that I've just mentioned that are in. I also want that to be a strong industry group or an improving group. Okay, so if I look at that now, we can look at, let's see, paper products, heavy construction, oil field. But I'll take the list from the stock watch list, come over here and make sure that the sector I want is also strong or whatever. By that I can click on the relative strength on this list, and it'll list the industries groups by strongest to weakest. Another way, we've talked about this before, another thing I could do is come over here to say to heavy construction, click on that, and it'll also give me a list of stocks that are to buy. But at any rate, from the 5-star stocks, I take my list of 4 or 5 stocks, and I want to find an industry group in here that is strong. And if I find one, whichever industry is also the strongest, that's the stock that I'm probably going to pick if they all meet the same requirements as far as the long opinion and the score. Okay. Now, the reason you want to do this is because you can buy, if you're in the right industry in the market, you're going to make money. All stocks, a rising tide lifts all ships. But you can also, if you're in a wrong industry, in a weak industry, even though you're, maybe let's say you like Coca-Cola or Pepsi-Cola, great companies. However, if that industry is out of favor, you're probably not going to make any money until the thing comes back in line. It doesn't matter, just the market rotates in and out of these sectors like that. Okay. The next thing I wanted after that, just a good example would be like J.P. Morgan, the great company, well run, great management, but the bank stocks right now are not. They're down here. Look at the deteriorating conditions. You're not going to make any money probably in the bank stocks until the rates start to change, or you start to see the yield curve begin to expand, that type of thing. So anyway. So what we just talked about real briefly there, if you take about 2 days, it'll take you about 5 to 10 minutes. Maybe do it on Wednesday, maybe do it on Saturday or Sunday. You actually have a shot that you can keep up with the market, if not outperform it, and even outperform most of the hedge funds. Another tip that I use, when we talk about the CTI being market posture being bullish or bearish, a lot of times or most of the time, when the market posture goes to bearish, if I'm buying a stock, and I'll go back a notch here. Okay, if I'm looking at a stock here, let's say I buy this Consolidated Energy, and the market posture goes to bearish. Okay, well, I'm watching this stock for a while. When this Consolidated Energy all of a sudden falls out of, say, the top 25 or 30 stocks, performing stocks in this S&P 5 stars, that may be a sign that I'm also going to sell the thing, even if it's, as it gets the score goes to a -3, or when it gets downgraded to a neutral, I'll sell it. However, because the market posture is bearish, I may just leave that in cash and wait until we go back to bullish or bullish market posture before I add. Now this past January and February, and we went to a bearish market posture in, I believe, November 30th or 31st. So when you were selling your stocks back in December to the month of December and January, you could have been 60 or 80% cash when we rolled over in February and went long. A great position to be. You missed the big slide down at 10-12%, and one of these times when it starts to pull back and we go bearish, you're going to get that 20 or 25% pullback. You may be 100% cash. You'll be more than happy that you're buying shares when everybody else is selling. Like I say, with the professionals that we have that use this tool for their clients will tell us all the time when we go to conferences that you had a stock that was upgraded at 40. You guys you downgraded at 37. Actually went to a short at 35, and I sold it. The thing ended up going down to $20 or $15. If we can do that with one stock a year, that more than will pay for your whole subscription to Market Edge for that year. So that's just something to remember. Okay, that's just a little tip I wanted to give you because number one, I don't, until this Brexit thing gets out of the way, I'm not sure that we're going to have a real lot of action, except maybe some volatile intraday swings to go from there. But I did have a lot of stocks come in this week to take a look at. Next week, I said we were going to talk about some of the volatility indexes this week, but we will do that next week. I actually forgot. I apologize for that. But I have a list of some stocks that we want to look at. If you have some stocks that you'd like me to look at or questions, go ahead and start typing them in now, and we'll try to get that before we close. Okay, the first thing was this is called IHI, and this is iShares U.S. Medical Devices. It's an ETF. As you can see over here, we got a little bit of a uptrend. It kind of broke below this short-term uptrend, came down here and is testing the 50-day moving average. From this going up, your 38.2% retracement would be down here around 126. However, the 30-day stochastic is above 50, which is good. 14-day RSI on this pullback held above 50 or above 40, which is a bullish sign. The up-down slope has a little bit of negative divergence. In other words, people are taking some profits right over in here, which is not too bad. But if you would get a little bit of a dip or a sell-off and this thing would break the 50-day, I would certainly buy this ETF around 126. It's outperforming the market. You look over here next to the healthcare spider. You also see this. It's holding an uptrend at this area, holding above the 50-day so far. It's had some weakness on this last sell-off, but a lot of this is due to the biotech stocks selling in that, not necessarily the medical devices. So, I think that this is something that IHI could be bought for a good play. Another stock we had requested was Medtronic, which is also another medical device company. And I wanted to show you something on this thing. Everything is good on here. You're up here. The stochastic is up here above this 80, which is overbought. But that's good. RSI is still looks good. You made a new 52-week high. You were in a trading range of about $3 back here from about I think it was from about November to around April. Here's a little trick when you see a stock like this. If you take the trading range, which in this case is about $3, and you figure out how many months you have in it. In this case, we're about 6 or 7 months. Let's say 7, and so you take the $3 range times the 7 months would be $21. Over here, where you broke out at about 79, if you add that $21 to 79, you're going to come up with $100. This thing hit about 80, 88. My target over the next, say, 5 to 6 months or so on this would be about $100. So if you find a stock like this and you're looking at, where can it go on a breakout? That's kind of a neat little technical trick that you can do. You just take the trading range of this. Don't expand it too much. Try to keep it, where most of the support levels will come in and where it tests resistance. Take that range, multiply it times the number of months that's in that range. Add it to the breakout price over here. This was textbook here, where it came down here, broke through that resistance area, and kept testing that support, and then broke it out. And I think, like I say, on this thing here, I think you can obviously get, maybe make it to $100. The up-down slope shows great accumulation. You were back here around 70.75 on the up-down ratio back in, around February. You're up here around 2.75 or so now. So that's a stock that I think looks good. Okay, another stock they wanted to review was Boston Scientific, another medical device company. Not as excited about this thing. Again, you had a big gap up over here when they beat earnings, and they had a nice forecast, and it's kind of worked itself slowly upwards at this point. But you're starting to see a little bit of a rollover. And what I don't like in this part here is the 14-day RSI. It's staying above 40, which is good. You want to see that. It's showing some negative divergence, and you've had a lot of people taking some profits on it up in here, which is keeping it going sideways. I would watch this thing to make sure it stays above the 50 and above this upward trending line. If it breaks this, when you trade stocks that have gapped up or gapped down, there's a tendency for them to come back down, and when they get to that gap area, if this starts to trade below 21, you're going to have a lot of people that watch these stocks will start shorting it. What they call that filling the gap. And a lot of times when it starts to get down here, you're going to fill that gap, which could drive this all the way back down below 20. So that's just something to watch. Now, if it comes down here to around this trend line, it does not violate any of that gap, and starts to move up higher, then you got yourself something to work with. But I would, after this move here, I think I would probably maybe look somewhere else for something until maybe this thing works its way off this little bit. There's other places you can find some good stocks. An example would be if you go over to the industry group analysis that we talked about earlier, click on medical devices. Here you have a long list of stocks that you are all longs with a 0, maybe a -1. Just go over here, hit the symbol, go to a quick chart, and just look at the different charts to see which one hasn't gone up maybe 15-20% in the last week or two. Look at something that's got a relative strength, that's outperforming the market, and that'll give you a list of stocks to get here. Here's that Medtronic. It's the 4th best acting stock in that industry. So that was a good pick on that. Boston Scientific's down here. It's top 10. But these will probably be some better looking charts on that, or maybe give you a better place to go with some new money if you're looking to go into that sector. Okay, another one was Spectranetics. For some reason, this wasn't included in our medical devices. It will be in there tomorrow. With this thing here, I had to go back 2 years to evaluate this stock. A couple probably earnings misses or bad forecasts, maybe some new device or something like that didn't get approved or whatever. But you've come down here for the top. If you come down here and measure the Fibonacci retracement off of this low that you're starting to build off of, you've retraced 38.2% of this total down move, which is where you expect the first resistance, and it's having some trouble getting through that. Okay, if it can get up through and trade through this $20 range with a little bit of an upturn in the stochastic and RSI and the up-down ratio, a little bit of a pickup there, your next resistance area is going to be around this 24, which turns out that's kind of where it gapped down to and kind of tested that area for a while before breaking down again. So that's fine. If it can't get through this $20 level, the way these indicators begin to keep going lower, that's probably about the extent of this move. But again, the chart's going in the right way, and if we can get through that area, you got a shot to go up to $24. And if we can get through that and test this area, sometimes these things will retrace the whole move down. So, it's been following the 50-day moving average, finding support there over the last couple months also, and that's all bullish. So, at this stage, that's all I've got for you today. If we have some questions, we'll take a look at a couple stocks, and I'll go ahead and close this part down and open up the charts so we can share the screen. Okay, can you see the chart? You can? Okay. All right, let's open up, see if anybody has any questions or any stocks to look at. Let's see here. Okay, how about Cisco? All right, Cisco's had a little gap up here on some good revenues. A little bit of the momentum's really slowed off after this little gap up to the run. It's challenging. This is what, a 2-year chart or 1-year chart? This is a 1-year chart. We're up here challenging the old 52-week high. Accumulation is flat at this stage, but we're long with a -1. The move over here, we get, you're going to have some support up here off the Fibonacci retracement of this move here, back here around 28 and a quarter, so 28 that area. You might, depending on what the market does over here, if you could pick this thing up down to this area, fine. Or if we get a big spike up here with the broader market, you start to break out the new highs. Cisco looks okay. I don't like the way the RSI looks in here. You want to make sure this stays above 40. We're at 42.60 right now. If that breaks 40, stay on the sidelines for a little bit, because in a bullish trend like this, you want to make sure the 14-day RSI stays above 40. If it starts getting down here to 35 to 20, that means that you probably that move may have run out of steam for a little bit. EPR, okay. Slow. Okay, wow, entertainment properties. I'm taking for granted since it says properties, this is probably a REIT. If it is, the REITs are doing great because it's probably going to pay 6-7% dividend on here. It's had a heck of a move from about 50 to 74, so it's up about 50%. Found support at the 50-day moving average over here. Stochastic oscillator staying above 80. This 30-day stochastic thing that I like, when it stays above 80, that means you're having a good, strong momentum move. Overbought on the RSI over here. It's kind of working off that overbought position over here. Up-down ratio looks good. You're not a lot of profit taking, maybe a little bit over here. This is probably due to the fact that if they thought interest rates were going to go up in June, you probably had some people that had you get a 50% gain in a REIT, you probably don't want to take it. So I imagine this is probably more due to investors thinking that if they raise rates, I want to lock in my gain. So at this stage, I don't see any problem. You got a sell stop on this thing over here around 70, just in case you would see it get a little bit top heavy, but which is right around the 50-day moving average. I think on these REITs and some of these high dividend things, as long as they stay above the 50-day, you're in pretty good shape. But technically, this thing looks fine, and until they start to raise rates. IBB, okay, let me write these down real quick. IBB, Amazon, CMG, and Netflix. Okay. All right. Well, these last four, and that'll be it. IBB, I'm afraid to look at it. Let's see. Yeah, it's put in a bottom over here. I mean, it's trying to. RSI is back below 30, which is negative. The up-down ratio is also showing negative divergence. The 30-day, once it gets around under 20, means that the momentum is still to the downside. I'm not. You're kind of in a trading range. I don't know what would happen to this thing if it broke below 250. I like biotechs. I think you need to own some. But in this case, I don't know yet. As long as you have the congressional debates about pricing, I think that's the problem with your biotechs. I don't think it's anything that they're not coming up with great new drugs or anything like that. But as long as the government's involved with the pricing models, you're going to have some problems. But but if they can't monitor themselves and they want to charge $100,000 per drug, they may have some problems with that. But this just isn't something that you want to buy yet. If you could get a triple bottom down here below 250 and holds again, maybe you buy that for another bounce. But if you're buying this for a short-term run at this stage, you're not looking at it's going the wrong way at this point. Amazon. Okay, Amazon made a new 52-week high a while back. It came down here, tested this sell-stop area. Resistant. Where's the resistance or support on here? Here's support down here around 699 to 700 level. I think that's good. It hasn't even tested the 50-day. You had this run up here on some good, strong earnings. A little bit of negative divergence on this on the 14-day RSI. Not bad. And you maybe had a little bit of profit taking. But I think these moves over here were basically on the whole market over the last week or two, when people kind of got out, moved to the sidelines a little bit. Not necessarily individuals, but some of the big institutions just wondering what would happen if a June rate hike had occurred, whether you would have gotten a spike down. Now, I think that's probably what you saw here. You'll probably see this thing move higher. Again, with the overall market, I like Amazon for long term and for the short term here. CMG. Before I get to CMG, let me take a look at Netflix, because I'm a little more familiar with that stock. Okay, here we are with Netflix, trying to test this support area around 93.25, 93.62. Let's see where we're at today. I thought today it was down about a buck or two. I don't particularly like this. 30-day RSI showing negative momentum. You're back below 30 on the 14-day RSI, which means that you're probably in a bear market on this. The up-down ratio is kind of sideways, so you're not seeing a lot of accumulation. I don't know that you broke the lows from January here. Going back 2 years, 3 years. You're making new lows over here on this. This is Chipotle. My bad. Okay. Chipotle. That's what we were talking about. Then you do have some accumulation down here. Well, this is nice, but you took out this low here. I don't like that. I think on this thing here, we got a neutral from a void, which means it was looking good here. I would want to see this thing at least probably wait until it trades up to 420 or start to see this thing. If we're at least become an early entry buy candidate on the second opinion. I don't think it's there yet, but I don't know. This is you don't want to. This looks like you're catching a falling knife still to me. I've got to see something else happen to this that I see a little bit more strength coming to Chipotle, because at this point you don't want to buy the stock when it's making new lows. That's for sure. Has it made a bottom? You'll know if this has made a bottom after it comes up and goes up to 420, comes back down to 410, 400, and makes a little bit sideways. This needs more sideways back and forth filling before you want to buy that. Okay, Netflix. This will be the last one because we've kind of gone a little bit too long. I apologize for that. Okay, Netflix. Let's look over the year. Okay, we had a nice bounce back up here to the 200-day moving average. Bounced right off of that, came down, broke below the 50-day, going sideways here at this support level. You have this 14-day RSI. Again, if you're in a bullish trend, you want to see that RSI stay above 40. This thing's down here at 19. It's oversold. And the 50-day, the 30-day stochastic is getting ready to go below 50. That's negative. And your up-down ratio is sideways. On this thing here, you better wait until this thing's an early entry candidate. And you also want to make sure to see if this low back here around 86, 85 and change holds. Because if this thing sells off some more and breaks that, you don't know whether it's going to catch itself at 80 or not. So you want to wait till this thing at least comes back up here, maybe on the 14-day crosses above 50, or keep an eye on this 30-day stochastic, see if it can stay above 50. But I don't think I'd be buying this thing yet. I might want to see Netflix come up here to maybe get it back above the 50-day and start to challenge to see if it's going to get to the 200-day. I think you're just buying this because of what it did over here. Not I don't see the upside of this thing right now. Even though the stories remain as one of these FANG stocks. At this point, this support breaks here. You got a pretty good drop to come down. Okay, that's going to be about it for right now. I'm sorry I couldn't get to more, but we're going to wrap it up. This thing will be up on the website probably in the next hour or so. I appreciate you taking the time to join me on this thing. You can watch it again during the week. And again, next week I'm going to try to talk about some of the different volatility indexes, the VIX and some of the ones with crude oil. And hopefully we'll get this Brexit vote behind us and see whether the market can make a run of some new highs once that's behind us. I think we can probably still have a summer rally for a while, and then we'll probably boil down to what's going on in the election after that. And we may have some more weakness. All right, thanks a lot, everybody. Have a good week.